growth of between 2.3 and 4% next year. This is still below the average 6% growth, which historically follows a recession. In the meantime, companies could begin spending more cash, pushing the markets up by the spring. But where do you want to put your money in this market? Uri Mann is back with us. He's a financial analyst. So, Uri, what do you think? Is stocks the place to be?
Yeah, I think this is a year where you have to diversify, put your money, a little bit of money everywhere, because you really don't know where things are going to go in 2010. It's a question of, will the dollar continue to strengthen? Will interest rates stay low? So it's a big question. What's clear is that in the beginning of 2010, the stock market will probably continue to benefit because it's bouncing off of the negative news in 2009. The question here is, when in 2010 do people start realizing about the bad news coming in 2011? And I'm talking about the fact that we have to reduce. We've got to reduce the deficit, and there's only really two ways to reduce the deficit: stop spending, which means less stimulus, or raising taxes, which is going to be a burden on the consumer. So we don't know when it's really a psychological thing that's going to happen. Sometime in 2010, the investors will look at 2011 and say, wow, there's some bad news coming. And, add to that the fact that, the international potential for conflict is still out there. I mean, most people are saying there's a 50-50 chance that the U.S. and Israel have to attack Iran in 2010. I mean, that will have a severe impact on the stock market. Again, it'll probably mean a rise in the U.S. dollar.
Let me stop you there. So outside conflict is one threat that you see. You see a threat of higher taxes, a threat to the consumer. Some say rates, as you mentioned, rates could be a threat to the stock market. What do you think, based on some of those threats then, it seems like the same conversation we have for investing in safe havens, like gold, for example, like commodities. When you're talking about weighting your portfolio and diversifying, how do you do that? How much do you have in stock? How much do you look at commodities in something like gold, for example? How much do you look at bonds?
I think you do. Everybody has to have a responsibility of putting a small percentage of their portfolio in commodities, whether it's 4 or 5% in gold. It's definitely a good place to be hedging and putting some money. The reality is commodities have done so well in 2009 that you have to be worried about where they're going to be going in 2010. Long term, I'm bullish about commodities, but in the short run, we could see commodities retreating significantly. It really depends on what goes on in terms of the emerging markets, how they perform in the next couple of quarters.
And as far as the banks, one of the things that Barron's picks up this weekend is that the big banks are in position, like Citigroup, like JP Morgan, to really benefit coming out of this recession, more so maybe than the stock market will benefit next year, the broader market, the S&P. Do you think that's the case?
I think they make a good point, especially if you compare the fact that these banks, with the traditional type of banking operations, will do better maybe in 2010 than some of the operations like Goldman Sachs and JP Morgan, who benefited significantly from the run-up in the stock market. If we don't see a big run-up in the stock market in 2010, the traditional banks might do better than some of these investment banks, or investment banking operations. But they make a good point. JP Morgan probably has the best mix of all the firms if you compare them against Wells Fargo, Citibank, in terms of being positioned for having diverse businesses and potential profits in 2010.
Yeah, we haven't even gotten into the commercial real estate threat, but we're going to have to leave it there. Speaking of the banks and what could affect them, Uri Mann, thank you very much, Uri. Connell's going to be back in a second, talk a little bit more to Uri, but in the meantime, Ashley, back over to you.
All right, thank you very much, Jenna. A winter storm dumping more than a foot of snow in parts of the northeast could cause trouble for retailers. The storm keeping some shoppers away on so-called Super Saturday, the final Saturday before Christmas. An estimated $15 billion usually changes hands on this day. A quarter of that is in the northeast. Retailers were counting on it this year as many shoppers delay purchases, waiting for deeper discounts. Well, Old Man Winter having mixed effects. Some stores reporting a surge on Friday and early Saturday morning, while others had to close their doors. Throughout the day on Fox Business, by the way, Adam Shapiro will be reporting from the Jersey Garden Mall on the storm's impact. Interesting to see exactly what impact that had. The holiday shipping crunch is expected to peak today, at least for UPS. The world's largest shipping carrier says it will deliver around 22 million packages just today. Wow. For the entire holiday season, they expect to see upwards of 400 million. Rival FedEx's busiest day was December the 14th, when they shipped 14 million packages, beating their expectations. Shipping from UPS and FedEx are closely watched because, well, they tend to indicate how the broader retail market is doing. All right, now let's for a look at some of the Fox 50 stocks in the headlines. Let's bring back Tim Call if we can. Let's look at Best Buy and Target together as far as Super Saturday goes. Tim, obviously the storm in the Northeast, terrible news for retailers. How do you think they're going to come out of this?